webcast on the secular theme of electrification. My name is Kathy Davey, and I work on Ashburton's Global Leaders Fund, and which is basically a fund which invests in up to 25 mega cap quality companies, so really companies that we believe will have sustainable returns over the cost of capital over the longer term. So just a bit of housekeeping. On your right-hand side, you will see a panel to ask questions. I will see them popping up. I possibly will only address them at the end, but could also address them during the presentation. But I will probably be speaking for the next 30 minutes or so, and then afterwards we'll have a bit of time for Q&A. So don't worry if I don't get to your questions straight away. Okay, so I think let's get into it. Let's start. Okay, so as I said, today's theme is the secular theme of electrification. So let me just move this down. So basically, what are we going to be discussing today? We are first going to start off with what is driving increased electrification globally. Then we're going to move on to what this actually means for electrical companies. And then I want to end off with a case study of Eaton Corporation. So Eaton Corporation is a quality company, a quality mega cap company that we recently added to our Global Leaders portfolio in order to take advantage of these secular themes that I will be getting into now. So let's start. Firstly, what is driving increased electrification globally? Okay, well, first of all, we know the energy transition is a major factor. Okay, so this is basically a shifting our global energy consumption away from fossil fuels and towards lower carbon sources of energy. And we need to do this to reduce our CO2 emissions globally and reduce and address climate change at the moment. So I think we're all aware of that, but this is really what is driving us to move more towards electrification. Now, I wanted to just chat to you about the fact that this is actually not our first energy transition. So the graph that you see in front of you basically shows our energy mix since the early 19th century. And as you could see, even midway through the 19th century, our fuel source was very homogeneous. I mean, we used to burn wood, we used to burn crops as sources of energy. And then came along the Industrial Revolution, and coal started becoming a much bigger part of our energy mix. It became integral in terms of the Industrial Revolution. I mean, if you just think of the fact that it powered steam engines, for instance. And so coal as a source of energy started growing substantially in the mix. Then we move on to as we moved into the early 20th century, of course, we had the introduction of the internal combustion engine, and at the same time, we had some large discoveries of oil and gas, and that really spurred the transition to then change to be more weighted towards oil and gas. I mean, just what's quite interesting about that period is we did have electric cars, but for a number of reasons, the internal combustion engine, I guess, won the race. And one of those reasons is at the time, Henry Ford was mass producing fuel cars, and so they were cheaper than electric cars at that time. And then also because of large discoveries of oils, filling stations outside of town started popping up, roads started improving. And so it was far easier for people to go outside of town if they had fuel cars. Electricity was not prolific outside of towns at that point. So then we had the electric car fall away for these various reasons. And of course, even up to today, most of our cars are based off petrol and fossil fuels. So now we move on to the our next energy transition. Okay, so of course, if you look at that chart, this goes up to 2019. You can see those top few lines are renewable energies. They are starting to become a greater part of our energy mix. So for the past decade, we've seen renewables increase, but certainly perhaps not fast enough. And we know this transition is taking place because we need sustainability in energy, and we also need more low carbon sources to reduce CO2 emissions. So although this is not our first energy transition, it could be argued that it's our most important. It's because, especially if we want to leave the planet to our kids in a way that we've enjoyed it. And it is really expected that this energy transition is actually going to be a lot quicker than the previous energy transitions we've seen before, because it is so urgent. Okay. So moving on, where are we today? Okay, so the pie chart on the left-hand side basically indicates the primary energy consumption per fuel, okay? And as you can see, 85% of our primary energy consumption still comes from fossil fuels, which is oil, natural gas, and coal. Okay, so that's a huge percentage. We only have 15% of our energy mix at the moment is low carbon sources, and even renewables is even less than that. So really, this isn't looking good. This is something we need to change. But now, if you look at the graph on the right-hand side, so if we took this primary energy consumption and we broke it down into what that energy is actually used for, so to generate electricity, one, heating, and for transport, if we broke electricity out of this graph, you can see that electricity actually has about 36% of its generation comes through low carbon sources. Okay, so it's actually a much more attractive energy source. And of course, the reason would be is because, you know, with transport, we know it's very, today it's very dependent on fossil fuels, and so is heating. Whereas with electricity, we've been able to move towards generating more and more electricity through lower renewable sources. So this makes electricity a relatively attractive source of energy. And what that means is we need to start shifting sectors such as transport and heating more towards electricity. In other words, we need to electrify buildings more, we need to electrify industry more. So another reason also why electricity is so attractive as an energy source is that this graph that's in front of you now is basically showing where the growth in electricity consumption came from. So the gray line is a bar showing from 2000 and 2019 that the growth in electricity largely still came from fossil fuels, so coal and gas. But the orange line is basically indicating where the growth in electricity is expected to come from over the next 20 years. And as you can see, it's about 80% of new energy consumption, electricity consumption is expected to come from low carbon sources. Okay, so electricity already has a good mix in terms of low carbon sources, but we are actually going to see that increase more. So electricity will just become greener. So if we moved on and we take this all into account, basically energy consumption globally over the next 20 years is expected to grow around 20%. So that's all the energy that we consume globally. Okay, but within that, electricity consumption is expected to grow 86% for the fact that we are going to be electrifying transport more. We're going to be moving towards electric vehicles. We are going to be electrifying buildings more, electrifying industry more. So what this means is that this is a very positive trend for electricity as a whole. And then if we move to the next slide, what we can basically see is that at the moment, when I split out the energy mix into electricity, transport, and heating, electricity is about 20% of the final consumption energy mix. If we do see electricity starting to grow at 86% within that 22% global energy growth, of course, electricity will become a bigger share of total energy consumption. They estimate that the Independent Energy Agency estimates that electricity will move from about 20% of our energy mix to about 30% by 2040. Beyond that, I've even seen to, up to 50% by 2050. So this is going to change very rapidly. So what does all of this mean for electrical companies? Okay. So what does this mean for electrical companies? So let's start at electrical grids. Okay, so if we are going to have this massive growth within electricity, of course, we do not have the infrastructure to deal with that load currently. First of all, we have a lot of outdated electrical grids. We can think about South Africa in particular, but actually, I'm not sure if you guys saw recently what happened in Texas. That basically they had weather that was colder than usual, and the electrical grid could not deal with the load, and basically they had to move to rolling blackouts. And that really is an indication that the US electrical grid system needs to be upgraded. Okay, and it's very interesting because this has definitely been acknowledged by President Obama. They have a $2 trillion package that they are looking for places to spend, and this will definitely be one of the areas they spend in terms of upgrading the current grid. But then, of course, we also have to extend the grid. Okay, first of all, we need to extend the grid to include more renewables, and of course, just to be able to handle this higher load. So if you look at the chart that's up at the moment, in the past 10 years up until 2019, the global electric network expansion under the stated policy scenario. So I'm just going to quickly explain what that means. So the Independent Energy Agency, which is just one of the most reputable energy agencies worldwide, where you can get a lot of energy data from, they have two scenarios in terms of where we're going in terms of our energy transition, and one of them is the stated policy scenario. And so the stated policy scenario is basically saying, if, you know, from what countries have announced and from what already is being implemented in terms of reducing CO2 emissions and transitioning our energy towards low carbon sources, this is what we see happening. Okay. Then there's another scenario called the Sustainable Development Scenario, which is the scenario which is a scenario that includes energy efficiency in terms of us having to reduce the amount of energy we actually consume. But what I'm talking about now is all the expectations around current stated policies. So, and we'll go a little bit more into this a bit later, but over the past 10 years, we've seen that the electricity global network expansion has been 9 million kilometers, okay? But over the next 10 years, the expansion in the electrical grid is expected to be 16 million kilometers, and most of that will be at the distribution stage. Okay, and we'll come back to that later because that's also quite important. So basically, we are going to see huge investment in terms of increasing the electrical grid globally. And the IEA estimates that the total investment in the grid will be about 460 billion in 2030. So that's 2/3 more than in 2019. So this is big. There's a lot of investment going into this. And of course, this is going to be benefiting electrical companies. So moving on to the next point, renewable energies. Okay, so how grids have traditionally worked, electrical grids, is you have your power generation utility, your ESCOM, on one side, and then electricity flows in one direction. And so the electricity is transmitted at the speed of light to the distribution network, and then it's sent to our houses, our commercial buildings, industry. Okay. However, if you think about renewables, the way renewables plug into the grid needs to be far more decentralized. Okay, and the reason is, of course, because you need a solar grid where the sun is shining. You need a wind panel where the wind is blowing. So basically, you can't have this more the centralized system. You have to decentralize it, and renewables have to plug in to the grid at any point they can along the way. Okay, increased grid connections, very positive again for electric companies. So we're going to see a lot more grid connections coming into the overall grid environment, electrical grid. So, and then second to that, of course, renewables is not as reliable as you would get fossil fuels to be. So basically what that means is we need storage. We need increased investment in storage so that when the sun doesn't shine, we've saved a bit of that electricity generation. And when the wind doesn't blow, we also have stored energy there. And what that also means again is that, of course, the storage, a lot of the storage and the connections around the storage will be implemented by electrical companies. Again, positive. And then digital solutions. So the grid is also becoming far more digitalized. And the reason being is because, well, of course, you know, the world technology is becoming a greater part of our everyday lives, but we need smarter technology on our grids. So when you start plugging in renewables into the grid, you need systems that can be intelligent and say, okay, well, hang on, there's not enough energy coming from this source. We need to switch to this source. Okay, so you need smart systems. You need smart systems to integrate renewables and to optimize renewables into the electrical grid. And then on top of that, you also need to gather a lot of data on how consumers consume electricity. You know, when are peak periods? When are periods of vulnerability? Cyber risk is also another big problem. If we're going to make our electricity systems more digital, we need to take cyber security into account. So any electrical companies that can play in the digital solution space when it comes to electricity will benefit from this. Okay, electrical content per vehicle will grow as the architecture changes. Okay, so of course, vehicles have been a growth in terms of electrical content. So as we know, the cars today are far more electrical than they were before, but I'm talking about internal combustion cars now. I guess even internal combustion cars, they have become a lot more electrical. So it has been a growth area. However, what this chart that I put up shows you now is that as you move from an internal combustion engine car to a mild hybrid, then a plug-in hybrid, and then a battery electric, you can see the amount of electrical content within a small light or within a light vehicle basically multiplies. So 7 times for a mild hybrid, but to a full battery electric car, there's 12 times more electrical content in that car. So if you have an electrical company that plays in this space, again, very, very positive in terms of increasing electrical content. And then, of course, electrical vehicles need charging stations. So this seems simple. We'll just, put in a few electric vehicle charging stations all over the place. And actually, technically, it's not, because so I read a report recently, a European report, that stated that for electric vehicles to be viable, we need 1 electric vehicle charging station for every 10 cars. If we don't have that, then consumers will lose interest in electric vehicles. So we really need to make sure that we make electric vehicle charging stations available. Now, if, for instance, you take the First Rand building that I'm in at the moment, the electrical system would not have been originally set up for the load that, let's say, 25 to 30 electric vehicle stations would need. So what that would mean is if commercial buildings or even houses or even industry basically want to have electrical vehicle charging stations, they need to modify their current electrical system within their buildings. And of course, again, very positive for electrical companies. So they'll come in and implement what they need to in order for these commercial buildings to be able to offer electrical vehicles charging stations. Interestingly enough, the chart that I've got up at the moment basically is also from Eaton Corporation, and they say that as soon as a commercial vehicle looks at implementing 25 charging stations, in general they get about 50% uplift in terms of electrical content. So again, very positive if your company plays within this sphere. Okay, I'm now just going to chat around energy efficiency. So we talked about the energy transition, and as I said, all what I was talking about in terms of the estimated energy growth and electricity growth, that all takes into account stated and current policies. However, if we were to look at moving towards, what's specified under the Paris Agreement, we need to actually start reducing our CO2 emissions. So under the stated policy scenario, we don't actually reduce our CO2 emissions, but we certainly slow down the increase. But we have to do more. And that is where energy efficiency comes into play. So if you look at the graph on the screen, this is from the Independent Energy Agency. Again, this was the 2020 World Report. The scenario we've been running through at the moment is the top blue line over there, but really, and if you, it's really what we want to do. If you look at the y-axis, you can see CO2 emissions. If we really want to get to the point where we are reducing our CO2 emissions, we want to go to the sustainable development scenario, which is the green line. So how do we get from one to the other? So one of the things we can do is we can change the way we behave as consumers. So we can be more cognizant of the way, how much electricity we use. We can turn off lights. We can do all of these things. But actually, if you look at the graph, that's not going to change the needle massively. The big things that are going to change the needle is the yellow line and the orange line. So basically, we need to reduce the emissions from existing energy infrastructure. So although we want to move to a point where we're increasing the electrification within a building, in the same respect, we want to reduce the amount of energy that that building actually uses, okay? And then second to that, as we expand our infrastructure, we need to have standards when it comes to energy efficiency when we build. So we need to retrofit current buildings, and then we have to have regulations when it comes to building commercial buildings or industry in the future. So if we look at if you look at the charts, the pie chart that's just come up, you can see that industry and buildings are the largest consumers of energy globally. So they take about 2/3 of our global energy. So what that means is, in terms of targeting energy efficiency, we really need to target these two spheres. Okay. Now, when it comes to industry, it's probably a little bit easier because industry perhaps would understand the cost benefits of spending a bit of money to retrofit your factory to make it more energy efficient. When it comes to buildings, buildings tends to make up a much smaller cost of the overall cost. So if you think about a residential building, and so there's less incentive for a landlord to spend more money on retrofitting their buildings for their tenants in terms of making them more energy efficient. So what we need and what we're starting to see is far more regulation around this. And we're also looking at, there's also a lot of government incentivization. So at the moment in Germany, they've implemented an incentive for landlords who want to, so they will have a rental cap. And if they want to lift that rental cap, they need to invest in energy efficiency within their building. So we're going to see more and more of this. So we've seen a lot of regulation come through. We've seen incentivizations come through. The EU recovery plan has allocated 275 billion to green buildings and EV charging. We've seen that the EU now plans to improve the energy efficiency, so basically retrofit 35 million buildings, which is increasing the renovation rate from 1% to 2%, which is absolutely massive. And all of this retrofitting will benefit electrical companies because they will be the ones coming in and having to make these buildings more efficient. And then when it comes to the design of new buildings, they can get involved in designing the electrical architecture so that they are more efficient. Okay, I'm just going to end off with one more point before we just move on to our case study. But so obviously we are experiencing an explosion of data worldwide. Technology is using more and more data, and we are seeing more and more hyperscale data centers pop up. Apparently, I think there's about 176 globally that are under construction or being planned, which is about a 30% increase on our current base. So this is massive. This is a growth area. But the thing about data centers are they are massively energy intensive, massively. And so it's really in their best interest to get electrical companies involved when they are designing the electrical architecture of these hyperscale data centers to make sure that they make these centers as efficient as possible. And obviously this would reduce costs for the data center too. So that's just another growth area if you're an electrical company that plays within this sphere. Okay, so let's now, so I've set the scene, I think, hopefully. So in order for us to gain access to these wonderful secular growth themes, we decided on a company called Eaton Corporation. It's about it has about a 50 billion market cap, so it meets our criteria of being mega cap. It's a quality company, it's well run, excellent capital allocation, excellent history of returns, which we'll take a look at. We'll go a little bit more into detail. So Eaton is a power management company, one of the largest in the world. We've popped this chart up again to just indicate where Eaton really plays along the power distribution lines and transmission. And as you can see, they are more around the distribution towards residential, data centers, machinery, industrial, and commerce. And really, as we've described, this is where a lot of the growth is going to be coming in terms of content for electrical companies. Just on the right-hand side of this chart, I've just, shown how, broad their offering is. So they do get involved in the design and architecture of electrical systems and data centers and industry and commercial buildings. They do retrofitting, they do security, they do digital solutions, they do power distribution. So they pretty much, across the board. And I mean, interestingly enough, if you go to your local builders, you will probably see an Eaton product there. If you either you already know Eaton or you'll probably notice it now. So they're in a very good position to gain from these trends that we're seeing. And then I just wanted to give you a little breakdown of the different sectors. The different divisions. So if we look at the revenue split for Eaton, we can see that Electricals Americas, so the Electricals business is the Electricals Americas and Global, and they obviously make up the largest chunk of this business, but Electrical Americas is the biggest part of their business. Now they have about 30% of the electrical markets in the US. And this is actually a very fragmented market. So just over 30% at the moment. They've been gaining market share for years now. They, because of that, they're very profitable. So the Electrical Americas almost makes up 50% of their profit. Then they also have an Electricals Global business where they're still big, but they're not the biggest player. And that they've also been growing very nicely here. Then just to talk around their vehicles business, which is 13% of their sales. So of course, this vehicle business would have in the past benefited from the fact that light vehicles and commercial vehicles have become more electrical. But what is really exciting is when we look at the e-mobility section, which is also vehicle related, the blue pie chart, the blue section of the pie chart. This is basically the electric vehicles division. They do everything here from design, product, implementation. They are investing heavily within this business because they obviously recognize that that is where the world is going. It's not profitable at the moment, as you can see on the right-hand side. And of course, the reason being is because they are just putting a lot of money into growing this business and really trying to be a large participant in terms of the electrical space and electric vehicles. And then just one division we actually haven't chatted about, aerospace. So interestingly enough, aerospace and electricals has been a growth trend for a very long time pre-COVID. Okay, we know that airplanes have become increasingly more electrical, not propulsion, but just in terms of the systems. So obviously, it hasn't been a great place to be in recently. Eaton has about 40% of their revenue coming from the defense side. So aerospace defense is very defensive. They're long-term contracts. Countries don't tend to suddenly stop spending money on defense in poor economic times. So that part of their business has held up well. Of course, the commercial side has battled a little bit, but it's expected that we're probably at the bottom now. I think most people think things will start improving. So the expectation is that business will get back to 2009, so pre-COVID levels by about 2023. So we'll just start seeing slow growth over the next few years. But longer term, again, a lovely theme. Aeroplanes will continue to become more and more electrical. very doubtful that the propulsion of an aeroplane will ever be electrical. Most likely it will be hydrogen. We don't know yet, but of course, you know, the thrust that an aeroplane needs is far greater than a light vehicle or commercial vehicle. But yeah, well, that remains to be seen for the future. So that's basically the themes. So the divisions. So I just wanted to give you a little bit of a background of the company in terms of how they've been changing. So Eaton is actually a very old company. Old is maybe not the right word, but it is old. It's about 100 years old. Okay, so it's been around for a long time. It was one of the first listed stocks on the New York Stock Exchange. But I think what's very impressive about this company is the way they've demonstrated how they've moved with the time. They have excellent capital allocation. They have a very high free cash flow, and they've taken that money and they've invested it in growing businesses. So they've seen this trend of electrification, and they've decided, well, you know, this is where we're going. This is where we can play. This is where we can add a lot of value. And so what they've been doing is they've been getting rid of businesses that they don't see as core, like their lighting business, their hydraulics business, and they've been making acquisitions in electrical businesses and the aerospace space. Interestingly enough, their most recent acquisition which is Trip Light in the Electrical Americas business, and this business plays very well into edge computing. So they really are taking the electrical business to another level and starting to take the way the world is digitizing far more into account, this digital transformation that business will very much get into that trend. So in doing that, what has happened is it has positioned the company for higher margins. They're focused on where they can basically push higher margin, higher value, and higher growth. So what their company does is they put out five-year targets. So they're 5-year planning periods. And since 2001, every planning period, they've been able to improve the operating margin because they are concentrating on what they do well and where they can win. So they've just come out with their new planning period, which is 2021 to 2025. And so that's that last bar on the right-hand side. Interestingly enough, they had an investor day on Monday, and pre the investor day, they were talking about achieving operating margins of around 20%. They've now picked that target up to 21%. So the more they start acknowledging this addressable market that they have in front of them, the more positive they are becoming about the future of their business. They also, I think, were guiding around 7 to 9% EPS growth over the next 5 years. That's been up to 11 to 30% now, which really indicates the positivity that the company is feeling at the moment. And then I just wanted to just indicate the history of shareholder returns. So if you look on the right-hand side of this chart, looking at the 20-year total shareholder return, they've done better than their peer average. They've done better than the S&P, and they've done better than the industrial sector as a whole. Okay, of course, this is the past. We want to know about what's going to happen in the future. And I believe that the best years of this company are actually ahead of them. So they've given shareholders great returns in the past. And when we say total shareholder returns, this is share price movement, this is share buybacks, this is dividends, which they play in all of those return aspects. But I think really when we look forward at all of these exciting themes that we're talking about, I think Eaton is going to be a winner in the sphere. Okay, so I'm almost done. I wanted to give you an idea of a couple of projects that Eaton has been working on, just for you to understand how they help in terms of energy transition and sustainability when it comes to working with their customers. So the first project I wanted to chat to you about is the data center project. Okay, so I'm going to break this into two parts. Okay, so first of all, as I mentioned before, data centers are highly energy intensive. Okay, but data centers also need to be online 24/7, so they have to have UPS systems. Okay, so these UPS systems are expensive, and they only use them 99%. I mean, they probably don't use them 99% of the time. Okay, then on the other side of the coin, you get a utility, a renewable utility. So let's say you have, if you are in a renewable environment, what happens every now and then is you get what they call a frequency drop. And so it would be me sitting in this office now and the lights suddenly dimming, okay, or the electricity will just be turned off. So that is very much a characteristic of renewables. So at that point, the utility company needs a very quick and very short response and a very quick boost to the frequency, to the electrical system in order to regain frequency and make it more consistent. And what they can do in order to do this is they can buy latent, I guess, stored battery at a data centers with the data centers UPS. So basically, the data center will sell the electricity that's stored in its UPS system to the utility in order for them to respond to this frequency drop. It's called a frequency response. So if you think about the winners in this, first of all, the utility has a more consistent and reliable supply of electricity. Second to that, the data center is now able to generate revenue off their idle UPS that's idle for a lot of the time. And what does it bring to Eaton? Well, it actually increases the value of the project of installing a UPS by 25%. So of course, with this energy aware UPS system, they get 20% above just supplying normal UPS content. So that is one of the examples. And then the last example I want to talk about is, and this is an example that's close to home. So this is an industrial plant in South Africa. So this industrial plant obviously had a problem that we're all very aware of, which is our local utility provider, and in terms of not having consistency in electricity. And so what happened is they were losing about a month's production every year from inconsistent electrical supply. And then second to that, they found that every time they were drawing electricity from the system at peak hours, they were spending 4 times the amount on electricity. So it wasn't very cost effective. So what happened is Eaton came in, the industrial plant had solar panels, Eaton came in, they installed batteries, they installed a power distribution backbone and a microgrid system. And so what that did is that at any point in time, this intelligent system could decide where the most reliable and the cheapest energy source would come from, whether it was from the solar grid or whether it was from the storage or whether it was from the outside electrical grid. Within a year, this company had reduced its downtime by 50%, and it had also reduced its energy costs by 50%. They actually won the Hanover Massey Prize for industrial efficiency based on this project. So, of course, this was very effective for this industrial plant, and it did make them less reliant on the outside grid. What did it do for Eaton? It increased Eaton's electrical content on a very large install base by about 10%. So these are just the fantastic projects Eaton is getting involved in as we move to a more sustainable environment globally. And I'm just going to sum up now, just talking. So basically, we've talked about how the energy transition, sustainability, and digitalization are strong secular trends driving growth in the electrical sector. We love Eaton as a leading power management system that really is feeding into a lot of these trends we've been chatting about. And then also we see the business offering high margins, high growth, good cash flow, excellent capital allocation, and attractive shareholder returns. So I think, I think I'm going to end off there and see if there are any questions. But thank you very much for listening, and I hope you enjoyed that webcast and found it interesting. So I'm not seeing any questions come up yet.
There are 3 questions there, Kathy.
Oh, funny, I
see
can't
them.
see. Oh, wait, hang on a sec. Oh, there we go. Okay, so the question is, good afternoon, Kathy. Will you touch on the actual cost of converting to electricity as a primary source of energy? And by that, I mean the generation of electricity. Okay, well, so I think, so if you're talking about specifically us using more renewable type of energies than fossil fuels, okay, so fossil fuels at the moment are obviously relatively cheap as a source of energy. However, because renewable energies have become a lot more developed, they're actually starting to compete with fossil fuels in terms of pricing. So they become a lot more attractive in terms of generation. So I think the more and more you get volume within solar and wind, and we're able to connect it to the grid, in terms of energy costs, I don't think it's going to make a huge difference, possibly slightly more, but certainly from what I'm seeing, the prices of solar and wind are starting to become very competitive with fossil fuels. Okay, then the next question. Further to my question above, given unreliability and high cost of existing renewable energy sources, which mode and source of generation have been identified by world authorities to replace gas? Okay, to replace gas, oil, and coal. So I think it really depends what you are thinking about in terms of what are you going to be using energy for. So as I've just said now, I think renewables are becoming far more competitive in terms of pricing as we had before, as they were before. I think before they were more expensive. I think one of the benefits, of course, that renewable energy gets is that they obviously are more supported by governments, so they will get tax advantages. But I do see the fact that the more we move along, we get further down along the way with renewable energies, they will become subsequently just increasingly more cheaper. I'm not sure if they'll ever be cheaper than fossil fuels, but they will be more viable than they might have been, let's say, about 5 to 10 years ago. Okay. Then when you talk about what source of generation has been identified by worldwide authorities, okay, so I think solar, wind are huge at the moment, but as I said, I think it depends what you're talking about. So when I mentioned before, when you talk about aerospace, it's very unlikely we will get electricity-powered airplanes in the future. That is probably going to be hydrogen, because hydrogen is a clean energy. I think anything that's highly energy intensive, such as making steel, will probably be hydrogen. But when it comes to electricity, we would get as far as probably small light aeroplanes. So I think at the moment, hydrogen is a big player. Electricity largely produced by renewables. But at the end of the day, I think fossil fuels will be around for a long time. And the reason why, just in terms of as part of the mix, they will just become a smaller part of the mix. And I wish I had this chart to show you now, but just chatting to Eaton Corporation, they say that by 2030, they still expect 80% of cars to be internal combustion cars. So yes, we're going to see this massive growth in EVs, but of course you will still have, even hybrid cars have to have internal combustion engines. So So we will still have fossil fuels, but most of the growth that we're going to see in electricity will come from low carbon fuels. And I think those low carbon fuels will just become cheaper and cheaper and more viable to compete with fossil fuels. I'm just going to go down. Yes, I see the share price has run hard upside. Okay, interesting. So yes, we luckily got in. Okay, so I think industrials did run towards the end of last year. But I think we also, Eaton in particular has run quite a bit of the past couple of weeks. So luckily we have enjoyed that upside. I've had to relook at the valuation, but as I said, when they had the investment day on Monday, they've increased what they feel the earnings potential is from 7 to 9% EPS growth over the next 5 years to 11 to 13%. So I think the run has been justified. The earnings are going to be higher, but I think the company could possibly re-rate even more once the market gets in tune with these sort of secular trends that we're talking about now. I think what has happened in the past is that Eaton has been talking about this for a long time. However, the market needs more, needs a little bit more substance in order to know that this is going to be a big trend for that. And now we are starting to see that coming through in the numbers. Another thing is COVID has changed a lot of things. So COVID-19 pandemic has certainly speeded up a lot of these growth factors that we've been talking about, and things have been taken a lot more seriously in terms of the energy transition. And I think you're going to see a lot of governments coming in with very punchy numbers dedicated to the energy transition and also energy efficiency. So I still think, and funnily enough, I've been seeing a couple of upgrades coming through from the sell side recently. So I think they're positives. I think there's still momentum there. But also, just second to that, yes, we're lucky we've had a bit of a run up, but at the end of the day, this is really a long-term theme. This is something where you can enjoy, I believe, upside. I mean, unless the share price totally, gets out of reach, then of course you would want to reduce your exposure. But I really think this is a great medium to long-term theme that's good to have exposure to. Okay. Thanks, Kathy. Very interesting. The investment case for Eaton is compelling. Curious to know what your team has identified as the risks, if any, geopolitics, political, especially increased competition and pricing pressures. Okay, so Eaton is not the only electrical company, so of course that means that they have competitive pressures from outsiders. However, it does from their compatriots, but it does certainly seem like Eaton is quite far ahead in terms of their mix towards these secular trends and towards the digital space, and I think that possibly will put them ahead of their competitors. So I think this market is going to grow well, but I think you're going to see Eaton growing 2 to 3% above that. Okay. When you look at economic risk at the moment, I think that has reduced quite a bit. I think the world is becoming a lot more positive. I think, in terms of economically, so take away the energy transition and these secular trends, it's actually a great time to be involved in an industrial company such as Eaton that will, as I say, take away all these secular trends that will start enjoying an economical uptick. And then political risk. Well, I mean, I guess the political risk is that these sort of energy transitions and sustainability are not supported, and spending more in terms of infrastructure on electrical grids is not supported. So that probably could have been, what we saw under Trump. So first of all, the fact that he probably didn't have massive power in terms of actually enacting fiscal spending, but he didn't really have a green agenda. So possibly that wouldn't have been at top of his list. He would have probably pushed gas production and oil production more if he had another 4 years. So I think political risk, specifically when it comes to the US, because of course Eaton is a massive player there, has reduced significantly under Biden. Biden is very, very big on climate change and the energy transition. He's also very big on upgrading the current electrical grid in the US. So I actually think politically things seem to be moving more in Eaton's favor than perhaps they would have been under Trump. And then, so yeah, I mean, I guess one of the big risks also to electrical systems are the weather events. So as we've seen in Texas, a few years ago, we saw 80% of Puerto Rico's electrical transmission being wiped out by hurricanes. But actually, these being risks in terms of the electrical system are actually positives for Eaton, because what it is pointing out, it's pointing out the fact that we need to start using buildings, we need to start using houses, we need to start using data centers as grids. I mean, Eaton very much has this theory of everything as a grid. They basically say everything can be a grid. What we can do at home is we can have solar panels, we can have batteries, and when electricity becomes expensive, we can feed that back into the grid. Okay, so we can do that today. If you set your, and of course, those sort of implementations increase the electrical content of a house. But you could also use your car as a backup system for your house. Okay, so the electricity in your house goes down, but you've got an electric vehicle that you can plug in. So all of these things, I guess, events that are happening in the world are more and more pointing to the fact that we need to be more self-sufficient and sustainable in the way we generate electricity. So although an outage could possibly be bad over the shorter term, actually on the longer term, it's only just highlighting what we need going forward. What about the energy? So Kathy, what about the energy generated from difference in temperature? What about the energy generated from difference in temperature to capture energy? I'm not quite sure what that question is asking, unfortunately. What about what? Sorry, I'm not. I don't really understand the question. So yeah, perhaps if you want to pop me a line, Andre, after this, I'd be happy to have a chat with you about what you're asking here. So I think we above ground, below ground, temperature. Yeah, Andre, sorry, I think we might have to take this question offline, if that's okay. I think I just really need to understand exactly what you're asking here. Any more questions before we end off? I think I'm very happy we've almost taken the full hour. So okay. I think, okay. I think we possibly can end off there, but please get in touch if you have any further questions, and yeah, any further questions, anything more you want to discuss or learn about when it comes to Eaton. But it was great being able to share my views with you today. I hope you enjoyed it, and yes, thanks again for joining. Cheers, bye.